smooth. That's a thing.
And I ordered the cheap. It was wet and no, not wet. It was hot and melty, so I wanted to cool it down. Now that I think about it, I might have just destroyed it by cooling it too fast.
Got it. Freaking plastic.
When I thought about it, I'm like, yeah, I'm bragging about all these miles, but I do change my oil. I don't change the belts.
All right, everybody, you're here to learn about home loans. You're here to figure out, can I buy a house? This is my scenario. I had a job here. I work there. I'm salary. I'm self-employed. I own my own business. I have an LLC. You have all these questions about buying a house, and we're going to answer them right here, right now. And the way that happens is you load up that chat box. You go in a little phone, click, 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 and you ask all the questions, comments, concerns that you have about potentially buying a house. Whether it's your first house, second house, investment property, beach house, mountain house, regardless of what it is, we will help you right here and we'll teach you how to do it. And if you can't get help right here, you're going to do this. Every now and again, I put up these numbers and you're going to screenshot them. You're going to either call us or text us after the live so we can have a conversation about it and teach you how to become a homeowner. And I see hearts already flying in.
Well, I'll tell you
this.
this.
Thank you very much.
If you weren't qualified on Thursday, by Friday afternoon, you might have been qualified. Because in case you weren't watching, the mortgage market went down. Not a little bit, like fast, like ridiculously fast. Because the stock market went down fast.
Like detrimentally fast if this was 1930.
Yeah, like everybody's freaking out. The stops were kicking in. So interest rates went down. There's going to be a temporary thing, like temporary. Ashley, I agree with you right away. I agree with you. I'm blown away by what's going on. I cannot believe it. I'd like to think this isn't even the realm of possibility that Harris wins. Not even the realm of possibility. I'd like to think that. I'd like to go back to my knowledge that she was the worst rated VP in the history of rating. But once the mainstream media gets a hold of things, they reshape the weak minds real fast. Like, I hate to say it, but it's true. And I'm on your side, Ashley.
Well, give us some likes and shares, guys. Give us some likes and shares. We need more people in this room asking questions about buying houses.
But, dude, the market went down so much. What are the pricing for today?
Well, let me give you a scenario.
Okay, give me a scenario.
So last week, I would say probably Monday or Tuesday, I priced a file, and it's a little old lady in Texas buying a house, and she went to another lender. Lender didn't explain everything to her because there was points on her file. She didn't understand why, and just didn't disclose a lot of data. So she came to us. I put the file together, and I said, oh, there's points on your file. In order to hit this purchase price, you need to have a certain interest rate. And in order to get to that interest rate, check this out, it's going to cost you $12,000 extra.
12 G's?
Because of her FICO, debt to income ratio,
all right.
loan
so
to
like
value.
we're really pushing this file far.
Oh yeah. Okay. And she was like, you know what, Chris, I'm going to do it anyways, and I'm going to buy this house because I love it, and you're upfront and honest with me. And I said, okay, cool. I priced it today because I want a lock. $4,000 cheaper.
So I'm gonna. That's amazing. Amazing for our clients. It's awesome. We don't control the market. But I am gonna say this. Okay, so right before we're to file, and we got like a 30-day file or a 21-day file, and so it's real routine for us to go to our team. Do we float or do we lock? Do we float or do we lock? And on this file, Chris put out, do I float or do I lock? And all the laws came in, and I said, hey, dude, float. I really think that it's going to drift down because there's some indicators coming in. I didn't think it was going to be that much. But if he had locked that day, it would have cost the client 4 G's. Now, we both go back and forth when it's time to lock. We go, what do you think about the market? Why do you think it's going to go up? Why do you think it's going to go down? And then we advise our client because it's not an absolute. There is no absolutes in this. However, because I watch this stuff all day, I watch what the Fed said, I watch what's going on. I said, hey, dude, I really believe there's going to be a slight correction. And I said, I don't think it'd be bad if you lock. I think it'd be better if you float. I had no idea it was going to drop $4,000 in a day. Like $4,000.
Actual dollars.
Actual real dollars for a client that we're really in escrow with right now that he could have locked Thursday. but he didn't. And I think we'll probably lock today because I think it's going to come back.
Yep.
So
rates. What are rates,
yeah.
man?
Rates. Okay, so for a while, for a long time, I'll save the suspense. 5.375. I'm going to tell you how we got there, but you won't believe this. 5.375, 5.25. 5.2, what? Yeah. So for a long time, we were quoting the New American Funding best rates. And the best rates were coming in at 6% and 6.25 for a long time, months and months and months and months. And then we saw it go down to 5.75. And then on Thursday, we saw it go down to 5.5. And then Friday afternoon, the market took a dump. Like the stock market, if you didn't know, it took a dump. And really, really bad. And the bond market also followed through, which today, when we run pricing, New American Funding's best case scenario, 5.375 on a 30-year VA, 5.375 on an FHA 30-year, 5.25 on a 15-year Fannie Mae Freddie Mac, and 6.25 on a 30-year Fannie Mae Freddie Mac. This is the lowest we've seen them in 3 years, maybe 4 years. The lowest we've seen. Now, I think there's going to be a little bit of a correction that's going to come back up. I don't think it's going to skyrocket it up, but I do think there's going to be a little bit of a correction. But I was very encouraged when I saw all those indicators coming in and showing the rates going down, 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 down. At first, I was like, this can't be right. Then I looked at another spot. This can't be right. And I was like, holy smokes, what the heck's going on? Rates went down a lot, a lot, a lot. So if you happen to be in escrow right now, really prime sweet spot. Really prime sweet spot. Because I do believe market's going to recover. I think rates are going to tick up just a little bit. And then before they tick down again. I think in September we're going to see another tick down. But I don't think it's going to be as drastic as this. So what do you got for me, man?
Beth Burke out of Hotlanta, Georgia.
Hotlanta. Do you know why they call it Hotlanta?
I was just going to ask Beth that. Beth, why do they call Atlanta
Beth,
Hotlanta? What's
Beth,
the real reasoning
yeah,
behind
what's
this?
your? I'm gonna give you my reasoning in about 3 minutes because I think I know why, but I'd really like to know if I'm wrong.
It's hot.
Okay, Beth versus it's hot.
You're going to
Yeah.
say because of Magic City.
No. I'm gonna say because I remember when Atlanta hosted the Olympics, and when they did, there was
96?
somewhere in that range, yeah. So when they did, there was a drove of cash that came in, an unbelievable amount of cash, and rap was just kind of really going up, and the rappers
Chicken wings.
loved Atlanta, and they say the hottest women in the world are in Atlanta. We don't call it Atlanta anymore. We call it Hotlanta, and they put it in some rap songs. So I don't know if that's the reason, but that's how I know it is Hotlanta around the Olympics time.
Beth says it's the weather and the wings. I love me some hot wings. I do love me some hot wings.
Oh shit!
All right.
Salute from South Florida. I love South Florida. I lived in Coral Gables, Miami, South Beach, Miami, and one other spot, but I forgot.
Elite Joshua, thank you. Becca Stern. Is it better to be a homeowner but house poor or not?
Okay, so Becca, long term. Real estate goes up, it's an appreciating asset, and if you are in prime earning years, let's just say, Becca, that you're earning $100,000 a year. There's only two write-offs, big write-offs in our system, two real write-offs. One of them is children, and you get X amount of dollars, but it costs you way more to have that child. The other one is interest on a mortgage. And because of that, there's a tax advantage to having a mortgage. So what happens is if you're house poor, which means all your money goes to your house and you're poor, but you own a house. Eventually, what will happen is you'll pay down that mortgage and the house will appreciate in value. So at some point, there's a crux where you will cross over and you're in a way better situation. Way better. I've seen people sit on the sidelines going, hey, I'm going to buy a house someday. In the meantime, houses still go up. All the ones that were able to get in and hold on, that's the key. You have to be able to hold on. Because if you don't hold on, you're in a bad spot. You don't want to go so house poor that you can't pay your bills. So you can't eat. You can't. But if you bought a house instead of paying for rent, because no matter what, it costs you something for the roof over your head. If you bought a house, there are long-term benefits, even though if it does not seem like it at the moment.
Yeah, there used to be a financial advisor out there that used to recommend buy as much house as you can, and the logic behind it is your house is going to appraise, but your income ability is going to increase. So that mortgage payment, you start getting further and further away from it, and it becoming affordable is a lot easier, and life gets a lot easier. And you own a home, and you get the tax benefit, and you get to do all that other stuff that comes with it. Yep. All right, Hart. Hi, guys. Back to learn some more info.
Well, here's the info that you need to know. The interest rates tanked. The stock market tanked. Everything tanked, which is normally, oh no, bad news. But for our situation, because interest rates went down so much, people's buying power went up proportionately. So if you qualified for $300,000 on Thursday, you probably qualify for $325 today. Think that much?
How much on Thursday?
300 to 325.
Yeah.
About 300, 325. Yeah, that's about. So you qualify for more house today. It'll take a while before the market responds, but it's happening right now. This is good news. Very good news.
Ed Mart, how long before I can refinance if I buy this month?
Well, that's a loaded question because it depends on the loan. Let's say you went with a VA loan. VA loan is the only one with a hard date. So from the date of first payment, 210 days. From the date of first payment, and you must have made 6 payments. So VA has that hard guideline. Now, FHA has a different guideline, and it's going to say roughly 6 payments. It's not 6 months. Don't confuse that, because if you moved in on the 2nd of the month and you closed that month, we don't count that month. So let's say today's August. So if we closed and moved in on August, we don't count August. And as a benefit, the banking industry lets you skip the following month because you just paid a whole bunch of stuff. So you don't pay September. Your first payment would be in October. So when you took possession in August, your first payment is October, and then I gotta wait 6 payments from there. It's a little complicated for all the different loans. Fannie Mae, Freddie Mac's a little different, and then they're also gonna.
Edmar has a conventional.
Yeah. So if you ask your loan officer, and he's a broker, if you ask your loan officer, he's going to tell you, you can't do it for 6 months. The reason he's going to tell you that is because if he's a broker and you finance within 6 months, they take his commission back. It's called a clawback. And no loan officer likes that. However, if you went to a different loan officer and the numbers work, you could do it. They're still going to charge that loan officer back. He's still going to have to give his commission back, but you can refinance. So it's a little dirty, but it's the way the world really works. And I kind of made our brand. We have made our brand, but just being honest. People are like, hey, when should I refinance? I'll tell you when you should refinance. And it's not good answers for a loan officer, because the average loan officer is going to want you to refinance every time it drops 75 basis points. They're going to go, hey, you can save a lot of money. And it's kind of true, but they're going to ask you to refinance again when it drops another 75 basis points. And again and again and again and again. You know why? Because every time you refinance that $500,000 house, that loan officer makes 5 to 10 grand every single time. So they want you to refinance often. We'll tell you, we'll take your refinance, but if you really want the honest answer, you wait till we hit the bottom, and then you refinance.
Yeah. So Ed, the answer is probably immediately, but you're not gonna. If you're only doing it to take advantage of the small interest rate reduction, it's not gonna be worth it to you. Probably gonna wait 2 to 3 years.
Yeah.
But call us. We'll let you know. Mika said, keep your house. Yes.
Good idea. Keep your house. By the way, make sure when you get in, even if you're going to be house poor, make sure you can make your bills. That's super important, because there's a tight period where you got to make your mortgage, you got to eat, car payment, health payment, whatever you got to pay. Make sure you can make that and be house poor, because if not, it's a losing scenario. You will eventually get caught.
Beth Burke, is modular manufacturing housing a good idea?
You take that.
Here's the problem with that, is that there's no right or wrong answers, okay? If you're looking for investment, maybe not the right idea. If you're looking for a place to live, if you're looking for a place that's affordable and it makes sense for you, this is where you got to look inside Beth Burke and see what makes sense for you. I'm not going to say it's a bad idea. I'm not going to say it's a good idea. But if property values in your house are different by hundreds of thousands of dollars between a regular stick built and a manufactured home might be the best. But here's going to be the recommendation to anyone that wants to buy a property. Get pre-qualified. See where you stand. See what that mortgage payment's going to be. See how much out of pocket you're going to have to spend. And then we can adjust numbers that make sense. And once they make sense, you can kind of point yourself in a direction from there. So you can't know where you're going unless you know where you're at. So Beth Burke, thank you for the question. Reach out to us if you have any questions. Drew 03, 660 credit, 100K salary, debt 1300. Got 660 credit, 100K salary, 1300 a month in debt. What can he afford?
Well, that $1,300 a month is arbitrary because I don't know how you're counting it. Let me give you an example. Let's say you bought a Raptor. This happened a lot. A lot of people bought a brand new Ford Raptor. They're badass trucks. They are badass trucks.
Joe Rogan got another one.
You did? Already got it?
I don't know. It's being made.
So the payment on a Raptor usually comes in at $1,100 to $1,600. But let's just say, easy math, $1,000. Okay? $1,000. You bought that Raptor, 5 years ago. And you're almost paid off. You got 8 more payments. $8,000. 8 more payments. And it's an installment loan. It's not a lease. But you see that $1,300? I'd look at that. I'd go, when did you buy that Raptor? You'd be, I'm pretty proud. I bought it about 2018. Brand new. Badass Raptor. I'm like, I bet you it is. Yeah, I bet you it is. That $1,000 payment. You know you got about 8 more payments left? He's like, yep, I got 8 more payments. That thing is mine. Mine. All paid off. I'll go, okay, cool. Your $1,300 a month liability, as far as the mortgage goes, I'm going to wipe $1,000 off today. What? Today. You know why? Because any installment loan with 10 months or less, I can ignore the installment loan. What? Yeah. So that $1,300 a month comes into play a little bit. You're making 100 G's, that's great. 100 G's in a normal market buy you, I don't know, 450 to 500 with the new rates. You might touch 500, but call it 450 depending on where you live, property tax base, homeowners insurance, and that. But that back end debt, I have to really figure out what that back end debt is, because if that back end debt eats you up, then it bites your buying power, and we'll help you.
Yeah, Hart said no matter what the interest rate is, whether it's high or low, it's always a good investment. If you can buy, buy. That's what Hart says, and I don't disagree. Here's why. Yeah, because interest rates have been a little high. Yeah. Okay, and if you get in, in a year or two, you can refinance out of that rate, and then you have the same house that's probably worth more and a lower payment. So I don't disagree, especially if you're looking for your primary residence, guys. If this is where you're going to live, raise your family, send them to school, have Christmas, Thanksgivings, those type of things. Yeah, don't try to time the market. Get in while you can. You will never regret it.
There's another little thing. A lot of people don't have the discipline or ability to create a savings account, a 401k, save some money. If you buy a house, you're forced to make that payment. So you get a forced savings account, even if you had to sell it. There's some value inside of that house, and you're way better off with that than not.
Yeah, CGYEBD. Do DSCR percentages, rates, cash out, refi also go down?
The whole market goes down as a whole. Everything is based off of the market, and the Fed controls the Fed funds rate. The Fed funds rate has a competitor called the 10-year yield. So as the Fed funds rate goes down, the 10-year yield goes down. And when that happens, all rates just kind of follow along because it's a market. So the answer is yes, but it's not steadfast. It's not directly tied. Even the Fed funds rate is not directly tied to the 10-year yield. They're just competitors. It's like Chevy puts out a new vehicle, then Ford puts out one in the same class to compete with it. One's better, one's worse. You know, what's better, what's worse, what's better, what's worse. Nobody really knows. They're kind of close. They're in the same class. Well, when the Fed funds rate goes down, the 10-year yield over the last 40 years have been in lockstep. It goes down with it. Like there's a little thing, but if you look at the charts, they're in lockstep all the way down. So all of them go down. DSCRs will go down. Everything will go down.
Yeah. Cynthia Chu. I got a house back in 2019. I used my down payment assistance. Do I have to pay more back? Question mark.
Well, it depends on which program, Cynthia Chu. There are multiple down payment assistance programs. So I'll bring up two of them off the top of my head. One's called CalHFA. CalHFA will give you 3% right now, 3%. And then you're like, hey, I'm buying myself a $500,000 house. They're going to go, cool, we're going to give you 3%, $15,000. So you're going to use that towards your down payment. All right, cool. Wait a minute, I need closing costs too. Well, then we'll give you 5%. We'll give you 5%. What? You'll give me 5%? Yeah, here's $25,000. So down payment plus closing costs. All right, cool, thank you. It's a silent second. What does a silent second mean? Well, that means it doesn't show up on your credit. It's not reporting anywhere, but there's a lien against the house. And when you refinance that house, you're like, hey, rates are good, I want to refinance. You owe them back the $25,000. When you sell the house, they're like, hey, I'm going to take myself $200,000 in profit. They're going to go, yeah, $200,000 minus 25 plus the interest on the 25. So they're going to get that money back. So that's called a silent second down payment assistance program. Okay? There's another one out there. I told you I'd give you two different programs. The other one is called Platinum. It took me a second. Platinum. Platinum is a grant. What? Grant. Yeah, they grant it to you. They just give it to you. That's awesome. Cool. Well, you bought in 2019. Your interest rate's probably 4%, somewhere in that range. Well, if you would have went with a Platinum down payment assistance program, you would have gotten that same house. But your interest rate wouldn't have been 4%. It would have been 5.5%. And it would have been much higher than the prevailing market. Well, you know what? You're going to outsmart them and pay it back a year after. No, if you pay it back 5 years or less, they want all the money back. So they have to wait. After 5 years, they go, okay, cool, that's your money, you're done. But the truth is you made up for it in payments. So there are different types of programs out there. Even if they're grants, there's always a catch. I've never seen one just say, hey, here's some free money. I've never seen not one, not ever, not one.
There you go. All right, Dion, how you doing? Can you find a lender who can lend default borrower? So a borrower that's defaulted and you want to borrow money again?
Yeah, there's kind of this rule in life. It's the scorpion and the frog. Oh, you want to hear about the scorpion and the frog story? All right, cool. Hey, there's this river, and both a frog and a scorpion have to get across the river. And the frog says, hey, I can swim. I can get across this river. And the scorpion says, I can't. Can you give me a ride? The frog says, I don't know. You're going to sting me, and you will kill me. But if you kill me, we both die. The scorpion says, well, you know what? That makes sense. I'm not going to sting you because we'll both die. So since we both know that, can you give me a ride? The frog says, yeah, that's pretty logical. You know what? I'll give you a ride. Hop on. Halfway through the river, the scorpion stings the frog. And the frog says, but we're both going to die. And he says, it's in my nature. It's what I do. And they both died.
So what are you saying? You're saying that if you don't pay bills, you're never going to pay bills?
I'm saying if you don't pay bills, we know what you're going to do. And you're going to tell a beautiful story on the front end of it. But the wise know scorpion and the frog.
People will do what they've done?
Yeah. What? That's a little bit rough, man. That's a little bit rough.
Hart said, any advice on improving
Navy
credit?
Mom Donna's in the
so I can hit my savings
Dude,
goal.
I have to say Navy Mom Donna because she says I didn't acknowledge her. I did acknowledge her. I was even telling everybody how badass she can make improvements on a house. She's badass. Navy Mom Donna, great to see you.
So yeah, there's a lot of improvements so you can fix your credit. Lots of things you can do. What can they do to fix your credit? Lee, tell them.
First thing you can do is pay your bills on time. Boom. There's the facts. Yeah. Second thing you can do is, hey, let's find out exactly where I stand, because what you think your credit score insofar as a mortgage goes is probably not what your credit score is. Because you pull from a free third-party app or from the bank, they use a different FICO model. We use FICO 5, and the only way to find out what your credit score is from a loan officer is to have a loan officer pull it. Then we know what we have to fix. Then we have a what-if simulator. Well, what's a what-if sim? Where did my little kids go? There it is. What's a what-if simulator? What-if simulator, after we pull your credit, we put into this special program and we go, hey, if you paid an extra $50 down on this MasterCard, your credit score would go up 7 points. Hey, if you paid an extra $20 on this one, your credit score would go up 9 points. It's called a what-if simulator. We have that. That's what we can do.
All right, everybody, hang in there. We're going to get to every single one of your questions. There's a lot in there, so hang tight. Don't leave. Time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by dialing the number on the screen. But don't dial right now, because Chris's phone is on Instagram and Lee's is on TikTok, and we cannot answer. But after the live, you can call. We will talk with you. We will solve your problems and get you a house. That's it.
Nice. Dizzy, how you doing? Does financing real estate in other country, will it affect financing in the United States?
Dizzy, only if they report. If they report to the United States, then it's a record on the United States. But if not, you have some questions that you have to answer at the end of a loan application. And however you answer those, that's what's going to show up. We encourage you to tell the truth.
There you go. Brandon, I just bought a Tacoma, $490 a month. Is it a badass Tacoma? Because some Tacomas are badass.
$490 is a good price, man.
$490 is not a bad at all. Drew 03. If that's the case, it'll be like $900 in debt. That's the one that had $1,200 in debt, I think.
Dude, Drew, see, I'm already chipping away at this, and this is only seasoned loan officers. Every loan officer should know this, but not all of them do. It's like every loan officer should know residual on a VA loan. They should know that GUS is the underwriting system for USDA, but not all of them do. Until you've done enough years and paid your dues, you don't know. But we know. Call us, Drew.
Brandon, I make $60,000 a year before taxes. What can I afford? I'm 21 years old in New Jersey. All right, man. Congratulations. 60K at 21. That's not a bad start.
You're probably, New Jersey, probably cracking 315 to 350, somewhere in that range. Yeah, 60K with not a lot of debt. Yeah, somewhere in that range, 315 to 350.
Avalanche Kids said house or condo in New York City.
What can you afford?
I would pick a brownstone. New York City? Take me a brownstone.
I don't know where brownstone is.
It's like what Cosby lived in. The Cosby Show?
We shouldn't be talking about Cosby anymore.
I don't care about Bill Cosby, but where he lives, badass. Walking down those streets, those little steps, the stoops.
They call them brownstones?
I think so.
Okay.
Am I right or wrong about that? Avalanche Kid, let us know.
Avalanche, whatever you can afford. Condos have a different, they have a HOA. Condos seem cheaper because the price is cheaper, but the HOA offsets it. So you should go apples to apples, end of day price to end of day price. That's what you look at.
Yeah. Dion, thank you for the love. Shauna, thank you for the love. TTSA 2012. How do you qualify for zero down?
Very simple. You give Chris a call, and he pulls your credit. He makes sure your credit is above 660, except in one scenario, which can be all the way down to 600. He makes sure that your debt to income ratio is below 45, except in one scenario, it can go up to 50. And we get your house.
Yeah. So all you have to have is a 660 or better, and you'll qualify for all the programs and a 2-year work history. That's how you qualify. I am Chio. What are the rates today?
Chio. I can't give you a quote, Chio. Okay. I can't give you personally a quote, but I can tell you what New American Funding is saying. New American Funding today says if you got a VA 30-year fixed and you were in their perfect scenario, 5.375. If you got an FHA 30-year fixed and you were in their perfect scenario, 5.375. If you got a 15-year Fannie Mae or Freddie Mac, 5.25. 30-year, 6.25. That's it.
Stephanie Tatiana, how do I get rid of my mortgage insurance?
You take that.
Private mortgage insurance, PMI. Stephanie, there's a couple different ways, okay? So you're saying PMI, which leads me to believe that you have a conventional loan, okay? So if you have a conventional loan, Here's how it works, okay? If you don't want to do anything, all you have to do is figure out what your original loan balance was and pay that loan balance below to 78% of your original purchase price, and it'll automatically disappear, okay? A lot of people don't have that scenario because they bought in the past couple of years and there's not enough equity in the property. And if you want to go that route, then you must refinance, which means they're going to do an appraisal on your property, take their current value. Hopefully there's enough space between that and what you owe. And if you have less than an 20%, if you have 20% or more in equity, I should say, then you can remove the mortgage insurance. Now, there's a whole other section, which is FHA, okay? FHA is going to be for life. If you got your loan after 2014 or 2014 and after, then that mortgage insurance you have on that loan is for the remainder of the loan unless you refinance out of it, okay? If you put 10% or more down, then it'll fall off in 11 years.
Yep.
Now, most people, to get rid of mortgage insurance, they're going to refinance. But here's what I'm going to tell you, Stephanie, Tatiana, depending on your current interest rate, is you're probably going to wait until 2025, 26, 27, somewhere in one of those numbers, because as interest rates drop, you don't want to get out of that PMI with the higher rate and then refinance again and then refinance again. You want to do it once. You want to do it right. But if you want to talk about it, give us a call. We can talk about it and see what the best path for you is. Rhonda JD, what's the minimum credit score needed to get a loan for a first-time home buyer?
Rhonda JD, very loaded question, but here's the simple answer. 500. But you got to have a gigantic down payment, 10% or more. Gigantic at 500. 580. You can get away with 3.5%, but that's a tough in this market. 620 if you want to go Fannie Mae or Freddie Mac, because that's where they start opening at. So the most common answer for that question is 580, but you can't go down to 500, and you're better off at 620.
There you go, Rhonda JD. Will be, if I give $100K, how much better is it to qualify? So if you're putting $100,000 down, how much better is it to qualify?
It's good news. Yeah, it's just
cash is king, man.
Yeah, cash makes people forget about a lot of shit, man.
It changes things.
That's why I just said that 500 FICO. If you walked in with 500 FICO and you said, "Hey, I got 3% down, 3.5% down on a $300,000 house, which is roughly 10 grand," the underwriter, everybody would say, "Yeah, nah, we'll pass. Not so much. Yeah, not so much." But you're like, "Hey, $300,000 house, I'm gonna put 100 grand down." All of a sudden, everybody's gonna go, "You know what? Come on in. Let's take a look. We're not gonna say no so fast. Let's talk about this."
Yeah. So here's what we would do, guys. So if you have a challenging file and you say I have a $100,000 budget, okay? Because I'm not going to use that $100,000 down. I'm going to use it as a budget. It's a different way of thinking. Because I can use that $100,000 to pay debt down. I can use that $100,000 to buy the rate down. I can use that $100,000 for down payment. So there's a lot of moving pieces here. So if you say I have a $100,000 budget, you'll get qualified likely to get qualified, because we can move stuff around and make it work, okay?
Yep.
April, do you have to repay using Home Ready program?
So Home Ready program is not a zero down program. Home Ready is a first time home buyers program. First time home buyer program lets you get in at 3%. There's two big ones, Home Ready, Home Possible. Now, Home Ready and Home Possible are great loans if you've got a great FICO score. The only real advantage is that you get in with 3% down and your MI is going to be lower. That's the advantage. But the only way that works is if you've got a 780 or better FICO. Why? Because if I ran your credit and you came in at 622 and you're a first-time home buyer, I would go, awesome, we're going to use a Home Ready or Home Possible. So you're going to put 3% down, and that's still true. But when I shop the MI, because you need MI on Home Possible, it's going to come in at 2.7% for MI. That's ridiculously high. So it will way be worth it to flip to FHA in that situation. Now, let me change the gears here. Remember, 2.7 at a 622 FICO. But now let's take you up to 780 FICO. 780 FICO, same 3% down. I price your MI 0.19, not 2.7, 3.19. That's amazing. That's better than an FHA loan. Well, what do you mean it's better than an FHA loan? Well, if I went FHA, you would have to put 3.5%, so 0.5 more down, but your MI would be set at 0.55, no matter what your FICO score is, 0.55. So they just take a number and that's it, 0.55. So Home Ready and Home Possible are great programs if you've got 780 or better FICO score.
Yeah.
Hope that helps.
There you go, guys. All right. Casey says she has an 8.6 on a HELOC, interest only, on a lake place last fall. Should I wait a little longer to refi?
Casey, 8.6 is pretty damn good. Like, really, really, in this market, it's really good. You probably couldn't get out of that 8.6 for much better than 8.6 because we're quoting, at least as of last Thursday, in the 9s, 9 to 12. So if you said, hey, I want to refinance my HELOC, you wouldn't get better than 8.6. So that's a pretty good rate.
Yeah, there you go. Will B said habits. I'm assuming when he's talking about paying debts off. Habits.
Scorpion and the frog story, I think.
Yeah, well, people will do what they've done. Lola, thank you for the love. Living with...
Is that from the Bible?
Melanie.
Scorpion the frog? I don't remember.
I haven't read the whole Bible, man.
That's
Literally,
hard.
I have not read the whole
It's
Bible.
hard to read.
I've not read the whole
It
Bible.
is really
I've read
hard.
a lot of the Bible.
It's hard to read.
Not the whole Bible.
It is hard to read.
Rhonda JD, well, never mind.
All right, sorry. Well, that was a refi.
Yeah, we answered your
Yeah,
question.
yeah.
User 619, hi, own my first home and outgrown the house. Want to keep my first and buy a new primary. Cool.
Good idea. That's yeah.
Here's the question.
Okay.
Can I use Calhaffa?
No, it took me a second because I went through the guidelines. So here's the.
You went through all of them?
Yeah, I went through.
Wow.
That was fast, right?
Interesting.
Yeah. So, Calhaffa, you have to have not owned a home in the last 3 years. Is that right? Not
Yes.
owned a home in the last 3 years for Calhaffa. So Calhaffa is a down payment assistance program, and they got a lot of rules on it. So probably not. Yeah, and plus they know that if you already have a house and you're building a portfolio, the down payment assistance programs are designed to get a family into a new house so that they can own a house. It's not designed to help you build your real estate portfolio. So that's the simplest way to look at it. If once you own a house, most of the programs are not going to be available to you. FHA 3.5% is not a regular, that's not a program, that's a primary residence loan. It's not a down payment assistance program.
Correct. But there are some down payment assistance programs that you can use if you already own a home. So don't confuse that, okay? But you're asking specifically about Calhaffa. Will B, if I get on credit pool, can other lenders use that pool?
No! Wow, I screamed that one out. No,
Everyone
yeah,
heard.
No. We get it all the time. They're like, hey, I got this other loan officer who pulled my credit. I'm like, oh, great. It's awesome.
Can't you use my Credit Karma?
No. Can't you just trust me, bro? Can't you just trust me, bro?
That's cute.
The reason is the whole banking system, my number, 944-254, and his number
1066958.
is tied to the bank, which is 6606, and they're tied to a credit reporting agency, so everything is trackable. So when I pull credit, my number goes on it, my authorization through my credit pulling company goes on it, the bank goes on it, so that when we actually approve you for a $500,000 loan, there's this gigantic chain of evidence of how we got you qualified.
So think of it this way. You go to a mechanic and you're like, hey guy, can't you just use my tools? He doesn't want to use your tools.
Yeah.
He's not going to use your tools.
That's pretty good.
He trusts his tools.
Yeah, that's pretty good. Yeah, that's pretty true.
Libby 410, first FHA home buyer, 600 credit score, 15K auto loan, 5K debt, 2-year income. How much do I qualify for?
Well, your 600 credit score hurts you a lot. Ooh. Not a little bit, a lot.
You meet the guideline.
A lot. Yeah.
But it's
so
tough.
if you wanted to go Fannie Mae, no, they're going to be like, no, keep shopping. Sorry, can't help you. If you wanted to go Freddie Mac, they'd be like, oh, no. Fannie Mae and us, Freddie Mac, we want you to go somewhere else. We do. FHA would be like, all right, come on down. 580 is where we start at 3.5%. Come on in. Let's see if you qualify. So we'd have to build a file based off that. But 600 FICO score, it's really hard to get a house, especially in this market with 600 FICO.
Yeah.
Got to get that FICO fixed. That's it.
Billy Boo, isn't PMI on FHA? This is a little confusing.
Ooh, really, boo. Let's want to have it out. Let's have it out. I heard there was PMI and FHA.
You're kind of right.
Well, kind of. How can I be kind of right? I have to be absolutely right.
Because you got the MI correct.
You are correct, but the MI stands for mortgage insurance, doesn't it?
Correct.
Okay, good. Well, what the hell's the different P?
It's not private on FHA.
What do you mean it's not private?
Private means that when you're conventional, you can shop all these mortgage companies to try to get the best premium, but you can't do that on FHA.
Why not?
Because FHA has something called MIP, which is mortgage insurance premium.
Oh my God! Well, what's that going to be?
Well, that's going to be 0.55 if you put the minimum of 3.5% down, but if you put more than 5%, then it goes to 0.50.
Wow! So we don't need the P in front of the MI in the conventional Fannie Mae, Freddie Mac deals. We need it on the back on FHA.
Only MI on FHA, PMI on conventionals.
And the reason is because you can shop it? That's it?
Correct.
Oh, okay.
So all of them have mortgage insurance, but they're just worded a little different for different reasons.
And FHA is set at 0.55. Doesn't matter if you have a 620 FICO, a 580 FICO, or an 800 FICO, it's 0.55 unless you put 5% or more down.
That reminded me of those real estate guys, the real estate posts.
Okay.
How they go back and forth.
Yeah, it's kind of cool.
Yeah. Hart said $5,600 monthly, no debt. I was told I qualify for $300,000. Does that sound right?
About somewhere in that neighborhood.
You're in that wheelhouse.
Yeah, in the wheelhouse. Yeah, I think I could get you more today if it was Thursday. Ooh, yeah, I think I can get you $325 if you're qualified for $300 on Thursday because rates have gone down a lot. They're in a free fall right now, like a lot.
Mm-hmm. And it depends on how they calculate your income too. So $5,600 may not be exact. Baby Rosa back in the house. 557 trying to buy this year, and I have 10% down.
Baby Rosa, that sounds good. 10% down, but that 557 is going to make it very problematic. Not a little problematic, very problematic. So let's more important work on getting that 557 up as fast as possible.
Yeah. Sean T. Tiff 101. I bought my house last year for $550,000. I put 110 down at 6.9. Can I refinance today for a lower percentage rate?
Maybe, but I don't know if it'd be a good idea right now. Here's the reason. Because the Federal Reserve puts out the numbers. You can go to their website, fed.gov, just look for the projections. Right now, the Fed funds rate is 5.25%. Even though you see rates coming down, the Fed has not changed the Fed funds rate. It's still 5.25 and 5.5. So they say into 25, 26, and then touching 27, the Fed funds rate will be at 2.5%. So I need you to know 5.5 to 2.5. That's 300 basis points, 3%. 300 basis points, 300 basis points. Now, the mortgage rates are not based off of the Fed funds rate. They are based off of the 10-year yield. But the 10-year yield goes in lockstep with the Fed funds rate. Over the last 40 years, as long as we've been tracking it, when the Fed funds rate goes down, the 10-year yield goes down. So what that's to say is we believe there's going to be as much of a 300 basis points reduction in the next 2 years.
All right. There we go. We've got a lot of questions up here.
We do, huh?
I lost my spot. Okay, Adrian Garcia, I have $260,000 of equity. Want to pull out $50K. Is it a good time to refinance?
Do you want to? Yeah. Do you want to refinance? It depends on what your rate is. I mean, if you have an 8% rate, it's a great time to refinance.
That's not bad.
Yeah. If you have an 8% rate, really good time to refinance. If you have a 2.75% rate, horrible time to refinance. Horrible. So that line is probably drawn in the 7s. If it's 7, it might be a good time to refinance. If you get into the 6s, probably not a good time to refinance. Somewhere in that range. Yeah.
But you can do a HELOC.
What?
So if you do have a low rate, you wouldn't refinance. And if you still want that 50 grand, you could take a second loan that'll be a higher rate, but you can't access that 50 grand. So Adrian, if anyone here wants to get started on a home loan, go to the link in the bio, select apply for a home loan now, or our phone number is there. You can give us a call. We can talk about it. Baby Rosa, we already answered that question, but we added a little more. 557, I have 10K down, a little more, trying to buy a house this year, became an authorized user as well. That will help your credit.
So it will help a bit, but the 557 is being caused by something.
What?
Here's the thing I hate to tell people, but it's true. You earned that FICO score. You earned it. You earned a 557. Why? Because somebody trusted you with debt, and you said, "Trust me, bro. I'll pay it back. Trust me."
Do you think she said bro?
I'm gonna say yeah.
Do you think Baby
she said,
Rosa
"Trust
said
me."
bro?
She said, "Trust me, bro. I'll pay it back."
Okay.
And then you didn't pay back the way you agreed. You didn't pay it back.
All right.
I'm sure there's a story. There's always a story. You wouldn't believe the stories I've heard. But it doesn't matter because all they care is did you pay it back by what you agreed. That's it. That's it.
Yeah.
So we got to fix that. And how do we do that? We're like, hey, I didn't pay it back on time, but I'll pay you everything if you remove it all. You'll pay me everything if I remove it all? Yeah. All right. Write a check. They remove it all. Boom. 557, 650. Like that.
It could happen. Lil Mama, first time buying, $5,000 down, credit score 725. It's great credit, Lil Mama.
Little mama, that's great credit. Great credit. $5,000 down. That gives you a little bit of buying power. That gives you a little bit of buying power. We need to know a lot more. Where do you live? If you live in California, probably don't have great news for you. If you live in Arkansas, probably have some pretty good news for you. Texas, depending where. Tennessee, depending where. Miami, not good news. Chicago, not good news. Detroit, probably some pretty good news. You can probably get something in
You
Detroit.
might buy cash.
I know. 5,000, yeah.
Melissa Torres said, following for answer. All right, cool. User 7387, make 90,000 K a year, no debt, 806 FICO. How much duplex can I qualify for if there was another unit to rent for $3,000?
You take that. That's a
So
good
here's
one.
the thing.
That's a great file, by the way. That is a good
well,
file.
that score and that income, dude, gold. I don't know if you're a guy or girl, and thank you for not letting us know because we'll start DMing you.
Yeah, I know, right?
Anyway, so the question is that 3K you're talking about for rent. Okay,
Mm-hmm.
that one I'm questionable on because people think I can rent it for this much, but that's not what we're gonna go off of. Okay, we're gonna request a 1004D from the appraiser. The appraiser's gonna tell us exactly how much that property can rent based on the market rents. It could be 2,000. It could be 1,200. So we're gonna base it on different sets of numbers. The easiest way to find this out is you can actually go to Zillow and figure out what the market rents are from Zillow, and they're kind of close. They're kind of close. They're not 100% accurate, but they're kind of close. Instead of guessing that amount. So based on that income, and we'll use your $3,000 a month in the rent with your FICO score, and assuming you have the minimum down payment, because you can go 5% conventional or 3.5% down, I'm going to say that you can probably purchase a duplex in the neighborhood of about $550,000.
I'd say that too. Yeah, that's about right. Do you have to repay Home Ready or Home Possible program? So the program, April, May, June, July, August.
No,
So
April, May, June are all girls' names.
All right. April. You don't have to repay it because it's not. They never really gave you anything. It's just a little program. It's not a down payment assistance program. You put 3% down. You used your money. You just happen to use a special program that says I haven't owned a home in the last 3 years. 3 years? Yeah, 3 years. I haven't owned a home in the last 3 years, and your FICO score was good enough so that it made sense. Because if not, your LO should have said, hey, your FICO, 622 FICO, your MI is 2.7%. You're way better off with an FHA. Way better off. So the easy answer, do you have to pay back? No, because you put 3% down. It's not really they gave you money program.
All right, dude, it's a little early, but I want to do some rapid fire so we can get through all these questions.
Dude, you want to rapid fire right now?
I hate leaving and people's questions aren't answered, man.
I do too, man. I want to help these people.
I feel empty.
And by the way, rates went down ridiculous. If you were qualified for $300,000 on Thursday, I bet I can qualify you for $325 today. What? That much. Rates went down that much. I think they're going to spike back up. But if you were qualified for $600,000, dude, $640 today. Why? Because rates went to the toilet. It's kind of good for you. So if you're really thinking about buying, kind of getting to be better and better.
All right, dude, let's do some rapid fire.
There's rapid fire.
Okay, Jadu, first time buying, $3,000 down, 685 credit score.
Dude, I can't do rapid fire if the name's Jadu, because that's a cool name, man. Jadu. It's like Ja Rule.
Could be Jadu.
No, Jadu's like Ja Rule, man. Jadu, first time home buyer, $3,000, 685 credit. That's cute, but we ain't got nothing. $3,000 down. Are you looking at a Detroit home of $85,000? Maybe. So you need 3.5% down. 3,000 gets you into the 80 to 90,000 range. You need more.
All right, Rad Rat said 100% she can get out of that for a lower rate. NAF has the worst rates in the market.
Oh, Rat Hat's trying to rat hat on us, man. Rat Hat's trying to be that rat, Wizzly Rat.
Yeah. Baby Rosa, 557. We already answered that one.
Yep.
Little Mama, already answered that one. Not an Oregon liberal. What's today's job market news and talks of recession? Do you think lower interest rates in September?
I'm not a Oregon liberal. I love that. You're not an Oregon liberal. We know
But
that.
I am an Oregon.
We know that. So unemployment came in horrible, like really horrible. Like, oh my God, freak out, horrible. And then there's more that happened overseas that affected our market, which was huge. China started moving up their basis points. What? They haven't done that in 30 years. What? That's a big deal. That's what really affected our market. The jobs report affected a little bit, but the jobs report, along with China changing their monetary system, that's when the market went, holy shit, what are we doing? Oh my God. So jobs news, put all that stuff aside. If you went to Vegas, they'd give you 100% odds that there's going to be a interest rate cut in September. 100% odd. 80% odd, it's going to be 25 basis points, and probably 18% it's going to be 50 basis points. So, do I think they're cutting in September? I've always thought they were cutting in September.
Continuing with rapid fire, Rose. So what if you're living with an ex? I like these ones. And you bought a house together, but now you're separating. Can you help?
Maybe. There's a lot to unpack there. Do you talk to your ex? Because if you guys are amicable and you're trying to take one person off the loan, refinance, take equity out, there's a lot of different ways to do this. If you're trying to be sneaky and go, I'm not going to tell him, he's just going to get a note from the sheriff and then get kicked out, we're not the guys you should be talking to, because we won't help you with that. If we sense there's any type of weird shit going on, I don't want any part of it. But if it's amicable and you want a real solution with grown-up adults that are talking on how to create a separation and split the equity or whatever you guys agreed on, we can help you with that.
There you go. Mia Love, how many days should we wait for an answer on a home offer? We ask down. Ask down what? Would you ask down, Mia Love?
Mia Love, if you were working with us, are you working with us? Is Mia Love working with us? Are you working with us, Mia Love?
I don't think that's her real name.
So let me tell you what happens. First, there's levels of professionalism in this business. If somebody's working with us and my realtor calls up and says, hey, Lee, we got this house in Katy, Texas that we're about to offer on. I say, cool. Who's the listing agent? They say, Bill Smith. All right, cool. What's Bill Smith's number? All right, Bill Smith's number is blah, 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 blah. All right, cool. Hang up. I get on the phone. Hey, Bill Smith, I just want to let you know, one of my borrowers is going to be making an offer on your house. I want you to know I've been in this business 20 years, and this person is well qualified. I know the file inside and out, and if you choose my buyer, this will close. Your seller will get their money. Everybody will get paid. There is no worry on this. Please call me, Bill, if you have any problems. Bill usually calls me within an hour and says, hey, Lee, yeah, it's running between 3 different. They're all about the same. I appreciate the phone call. Like 80% of the time, we win because I'm not afraid to talk to the realtor, the listing agent. So we know usually within 48 hours.
Okay. Absolute rapid fire now.
Dude,
absolute.
I'm trying. This is my absolute.
We know you know a lot of words. They just want an answer.
Big words like perspicacity. I know that one now.
Is DSCR only 25% down payment?
No. You can do 20 or 15, but you have to have really good credit score and a really good profile.
Little Mama, that's good.
Okay, good.
First time buying, 5 credit, 5K down, score 725. Does owning your own business do anything?
No, not at all. It actually hurts you, Little Mama. And $5,000 down is not a lot down. That's very little down. You'll probably have to go with a down payment assistance program because you need 3.5% on a $300,000 house. That's $10,500. You're at $150,000 purchase price. Your credit score of 725 is amazing, but the fact that you own a business probably hurts you a little bit. Probably hurts you because businesses can go bad.
Michelle, I can't pay my car payment no more.
All right, Michelle. Sucks to be you. You're going to be walking.
Jadu.
Oh, learn the bus routes.
Jadu, I need a loan for a house with bank. You recommend to get loan?
Jadu, right here. Call us. Yeah.
Screenshot. I'm going to drop this in a couple seconds. Okay, a couple seconds.
Okay.
Michelle, okay. Baby Rosa, I became an authorized user. We already know, you told us.
Yep.
Jay, been at my house 4 years. Do I have enough equity to refinance to get some money to upgrade my home?
I don't know, Jay. I would have to run a scenario on it. I'd have to pull your current notes, see what you owe, then do a comparative market analysis, see what it's worth, and then I can answer that question.
Michelle, again, my car payment is $547. I can't pay it.
Michelle, you better get a side hustle.
Jenny, thank you for the love.
Appreciate you.
Mike, thank you for the love. Hart, I have $40K to put down in Ventura County, California. Would there be any programs to pay my closing costs?
I hate to tell you this, Hart, but $40K in Ventura? In Ventura? No way, huh? No way. Ventura?
I'm
trying to think of the
I
answer.
understand your confusion.
Well, you want to put $40K and buy a house.
Okay, you could buy
If
a
you're
$1 million
Ventura-
house for 50 grand. FHA. What's your confusion?
$40K down on 3.5% down?
What's 3.5% of $1 million?
Ow! 35,000?
What's 3 times 10?
30?
So, yes, Hart. Yes.
Yeah, I was going to give you a different answer. Yeah. Yes, all day. Because you're a
There's a
rapid fire man.
possibility.
There's a possibility. Yeah, there's a possibility.
Little Mama, first time buying $5,000 credit card.
We did that.
Mia Love, what does it mean? Plus 240 over asking on the price of a home 450.
Damn. It means you're paying $700,000 for that meeting.
Damn, Mia Love. It's already happening like that?
No way. It can't be. So 240,000 over asking, which means, so I take the number of 450,000 and then I have to add 240 on top of it.
That's a showstopper.
That one's showstopper. Now that is a strategy some realtors use. They lowball the price. And the reason they lowball the price is because the market is the market. Whatever the market is, that's what the market is. And you can't fudge the market down or even fudge the market up. The market's going to be the market. So the realtor that I know says, hey, listen, if I have a $500,000 house, I'll put it on the market for $450,000. And then I'll have 50 people come at me because they all think they're going to get a deal. And when they call me, I'm going to say, hey, yeah, they listed it at $450,000, but we're taking highest and best. Make sure you give us your highest and best because we won't respond if you're not in the top 5.
If that's real, Mia Love, that's why you don't get a response.
Yeah.
If your offer
It's
is
a
too
joke.
low, they're not
Yeah.
even gonna engage.
Yeah,
with
you're
you.
not even close.
Yeah. Darcy Lopez. See, I told you, man. We gotta hurry.
All right. Hi guys, I have $14,000 in debt, but I want to buy my second home. Any advice? Yeah, the advice is I need your income. I need to know where you want to buy that second home. Second home guidelines. If you're trying to buy a new primary residence,
Uh-oh.
3 point.
Sound whatever.
Hold on. We're trying to fix the sound. We're on rapid fire sound. We should be back. We lost our mic. Here's your advice. $450,000 in debt. $450,000 or $14,000 in debt. We need to talk to you. That's a lot.
Yeah.
Adrian
Garcia, 2.25. All
I
right.
don't know what that means, but good job. That's a great rate.
All right. Okay. Grant McDonald. My credit score is 69. Is that good?
Grant.
Awesome.
Hilarious.
Pablo Guapo.
Guapo.
Would I be able to get a loan as a 21-year-old who always pays his credit card bills on time in Dallas?
Maybe. We have to pull your credit, calculate your income, and I put 21-year-olds in houses all the time.
Even if I don't know my credit score?
We'd know it. We have to pull your credit.
Little Mama, I live in Ohio. I paid my car off 9 months earlier. I own my own business.
We got to talk to us, little mama. Give us a call.
Joralee, what are you guys located?
He's right there. I'm right here. Riverside, California, but we do business in all 50 states. All 50.
Christian Ortiz, first-time home buyer here. I have a credit of 696. What are my options?
World's your oyster, man. Everything.
Everything.
You can do Fannie Mae, Freddie Mac, FHA, VA, USDA, VA if you're a veteran, USDA if the property qualifies. But yes.
You can build your own house.
Yep.
Apple user, what states do you work in?
All 50 states.
Jollery, what are the minimum credit scores to use a VA loan?
There are no minimum credit scores. VA is the only loan that doesn't care about your credit score at all, but it does factor in to your pricing.
Jumped on me.
No sound. Okay, got it. We got it, guys. We got it. We fixed it. Our little trusty dusty Mike, she took a dump. This little guy right here is badass until it's not.
Okay, here we go. Found it. Ellen Drew, non-owner occupied income property veteran, 750 or higher score. What's available?
Veteran, if it's a non-owner occupied, you can't use the VA loan, so that's off the table. You can't use an FHA loan, that's off the table. USDA's off the table. You got 2 options, Fannie Mae, Freddie Mac. If it's non-owner occupied, that means it's not even your second home, which means it is a investment property, 20% down.
Amia and Matt, thank you for the love. Gretchen said payment spelled wrong.
Appreciate it.
CV, do you work with new builds?
Yes, we do.
Apple user, looking for Central Washington. Do you have any agents that work in that state?
Yes, we do. We actually vet them because we're part of a top producer network, and we only deal with the top producers. So we'll get you the best agent in the region.
Your net worth is your net worth.
Yep.
Frightened Nation, 640 credit score and make $350,000 yearly. 2 open credit cards, 20K credit cards. Do I have to close out any to pay off credit card?
No, that income. If you're 350K, you're $1.5 million to $2 million. You know it.
Damn.
You know it.
Freight Nation.
Yeah, you know it. You might even be more.
Driver.
Yeah, you might even be more. But you know. Come on, you make that kind of money.
Freight Nation DMs incoming, bro.
All right,
Baby
cool.
Rosa, sorry I'm at work. I had to pause the video.
All right, cool. We didn't have sound, so you didn't miss anything.
Lil Mama, I could do 15 to 20,000.
Then that's different. That's a game changer right there, little mama.
Sela Baker, I have 170K in equity for my current home. Oh, 280. Went to buy a house for 580. Should I do it? Want to buy a house 580. Should I do it?
We'd have to pull your file and run numbers, but it sounds 50-50. Yeah.
Yeah. So Lil Mama said 15 to 20. That's better than 5.
Cool. No sound. Can't hear you. Yeah, we got it. We found. Yep. Yay. Okay, cool. Bought a condo in 23. Should I sell it or refi? Depends on the numbers and depends on your overall goal. I used to sell properties when I was younger. I don't do it anymore. I try and acquire them and figure out how I can acquire the next one without losing this one. Because if you put renters in them, here's a little hack from someone who's been around for a while. After you get a few of these things, they start paying for things. It's pretty badass.
Jerry Cook, realtor, Social Security income $3,900 a month with $160 in cash, 780 FICO score. Will we qualify for a loan amount? What will the loan amount be?
Give me the
$3,900 a month.
$3,900 a month. So
with $160K in cash.
50,000, 80, 330. I'm gonna go 330. I'm gonna say you're at 450 to 470, but there's a lot of other factors there. Like what's property tax base? I happen to know Texas in certain areas is very high. It's not like California. California is 1.25 across the board, and then you add for new builds. Texas, 2.9. I did my last one in Buda, Texas, 2.9% tax base. So it can get expensive.
A-Rod Gaming, I make $145,000 a year, either 25 monthly debt. How much can I get approved for buying a second house?
It depends on if that second house is a primary, your new primary, or your second home. If it's your second home, different guidelines entirely. We'd like to help you, man.
Thank you for the love, Apple user. Baby Rosa is laughing, crying.
Okay.
Bridget Ryan, New York State. Can you explain pros and cons of purchasing an estate sale home, first-time home buyer?
So estate sale is it's like a gigantic yard sale. It's just a fancy way for a realtor to put it on the market. The market price is the market price. That's what it is. I know people think they're going to get a deal on foreclosures. There was a time about 10 years when you could do that. It doesn't exist anymore. Foreclosures have a market price. Estate sales have a market price. Everything is the market. So you have to learn the market, then go off that.
All right. Freight Nation say, can I get a loan with these? 40K down.
Yes, absolutely. Yeah, give us a call.
Apple user, I'll shoot you a message after work. Thanks again. Just followed.
Appreciate you.
Miss Chinchilla, credit but no down, looking for mobile homes.
I wish you some luck. That's all.
I think we tried our best, man.
Yeah, we did good. Dude, we tried to keep up with the messages. There's so many coming in. We love you guys. We do. Tune in. We will answer your questions. We've been Chris and Lee. We are out.